Hello, it's Robert Miner with Dynamic Traders Group with a relatively brief update that we do for our YouTube followers and Twitter subscribers about the market setups, potential at least market setups for the coming week, what we're going to do this time. I haven't done one of these for 3 or 4 weeks, but what I'm going to do today is I'm going to go over 4 or 5 markets really fast because I think we've got at least 2 to 3 really clear, fantastic trade setups coming this coming week. So I want you to be prepared for those. And of course, if you want to learn more about what we teach, you can go to dynamictraders.com, subscribe to our Traders News, and you'll get some other updates other than what we do just for our YouTube subscribers. And it's absolutely free. We don't need any charge card, any information like that from you. Just your email address so we can let you know when there's a new update put up there. Absolutely free for you. And of course, check out our DT reports and our dynamic trading master course as well. Speaking of that, before we get started, let me show you something. Well, as you may know, Robbins Trading Company does a number of real-world, real-time trading contests throughout the year in Forex and in futures. So their global derivatives contest just wrapped up at the end of May, just recently. And you can see that I ended up in 3rd place in this with over 156% return for the year. Not too shabby. Now, I'm not guaranteeing you'll have that good a return, but I want you to understand that everything I teach and describe to you in these videos and in my reports, if you become a subscriber, is all practically oriented. I'm not a forecaster. I don't predict the future. I'm not an economist, but I am a trader, and I'm pretty darn good at it. I'm pretty good at teaching it. So if you'd like to learn more about trading, go to dynamictraders.com. Check out our Dynamic Trading Master Course. It's really a comprehensive course, I think better than any practical trading course that's out there today. Complete information on our website. That said, let's get started and take a look at a few markets. This is the SPX weekly data. I've been looking for a weekly reversal here for a couple, 3 weeks or so. We've had one reversal. We had one short trade set up, or bear market trade set up, if you do those bear ETFs. Got stopped out of it just last Friday on that big news pop last Friday. However, that has not changed the technical position of the market, and that the SPX and the other stock indexes should be within days of completing at least a weekly high. So here's the information, is that for the SPX, this is weekly SPX data, has reached the high probability target zone. It's right in it right now. We're going to narrow that down and bring it into the daily data in just a minute. The weekly momentums are dual look back bearish. That means the upside should be very limited before a weekly high is complete. I just want you to be aware of this one level is 41.69. Should the SPX make a weekly close below 41.69, it indicates that this advances a correction, and eventually the S&P would decline to below the October low. Now, eventually could be months away, but that's a real important signal. It's not a forecast that's going to happen. I don't forecast. I just identify conditions that are important and triggers that are important. So probable weekly high probably going to be complete next week. Next week is the 100% alternate time projection of, well, it's one of the significant ones in the weekly chart. Here's the daily data. And so here's the level to look at. This is a real important level just above last week's high, 44.81 to 45.23. If indeed the SPX is moving into a weekly high, that should be the maximum upside before that weekly high is complete. So it's a real important price level. The end of last week were some important daily time factors. We may have a couple more days on the upside, but that should be the maximum because the 8 daily momentum cycle is reaching overbought. When it reaches overbought, we're really, usually at least within 2 to 3 days of completing a daily high, and the next daily momentum bear reversal should coincide with a weekly high. So that's what we're looking at over the next couple, 3 days. Right now, a daily close below 43.96 will signal that the weekly high is complete. So that's what we're looking at. Not too far from where the market is as of the end of the day on Friday. Now, for our regular subscribers, we update 3 times a week. More than likely, we're going to be able to bring that level closer to the market to get an even closer reversal signal. That's what we're looking for over the next couple of days. This is gold weekly data. We've also been looking for a weekly low in gold for the last 2 or 3 weeks. Have not had a buy signal yet, though. But let's bring us right up to date. This is the weekly data. The weekly momentums are dual look back oversold. Week number 5, typically by the 4th week, it makes a price reversal. So what we can say is that a weekly low is overdue, quote unquote, in gold. And I think we've got about the perfect setup right now. So probable 5-wave decline. The weekly momentum's dual look back oversold. The low last week, very near the 50% retracement. And the 100% low to low to low was last week. So it looks like time, price, pattern, momentum are all together to complete at least a weekly low. But here's the kicker. Here's the daily data, and it's the closing data. Let me give you the range data first. Is on Friday had a pretty good update. Closed above the closes of the past 3 days. That's a 3-close bull reversal. The daily momentum's on a slight bullish divergence with a lower price low. That's fairly significant. Buying's coming into the market. What do we need as a confirmation? Is a close above 1933.80 will be the confirmation that a weekly low is complete. And the trend should be sideways to up for at least 2 to 3 weeks, maybe longer, but that would be the minimum. So it'd probably be like $100 or more on the upside. Not the beginning of an impulsive bull trend to new high, but a 3 to 4 week correction against a higher time frame bear trend. I think that the setup is there right now, but if you want a good confirmation, is wait for a close above 1933.80. So this is Bitcoin weekly, and the weekly momentums are dual look back bullish. They're not overbought. More than likely, there's another 2 to 3 weeks anyway of net bull trend for Bitcoin, and that more than likely Bitcoin this past week has been making a correction. Here's Bitcoin daily. As our subscribers know, we were looking at this for several weeks as a probable correction. It ended right at the 100% alternate price projection, 50% retracement. Beautiful, symmetrical ABCDE correction. Then, of course, we had the big advance. Our subscribers to our trade alerts were long before that big advance occurred. What's happening right now? Well, more than likely, Bitcoin is making a correction before it's going to continue that weekly bull trend, and that correction is likely to be complete within the next 2 to 3 days. The daily momentum cycle is oversold. That itself warns probably within a couple of days is this cycle will turn up, and that will complete a correction. So impulsive advance, corrective sideways. There's a way, I think at least, there's a ways to go on the upside with Bitcoin, and I'm looking for that next opportunity, probably early next week, to either add to the current position, or if you're not already long Bitcoin, to enter a long position for a continuation of the bull trend. Remember what Jesse Livermore, W.D. Gann, all the greats said, there's no price too high to buy as long as the trend is up. So again, this is, I think, a great setup over the next couple of 3 days. And this is the Euro daily. It's just the closing data. I think we're going to have a great setup in the Euro, but it's a few days away. More than likely, last Thursday's closing low completed an ABC correction. What's significant about it is it did that driving the daily momentum cycles to oversold, so they're indicating that more than likely a daily low is complete and the trend is going to be sideways to up for 3 or 4 days. If this is a 1, 2, 3, 4, one more advance to a new high will complete the impulsive advance from the late May low, probably around this level. This is the high probability end of wave 5 target, if indeed this is a wave 4 low. So look for, I should say, should the euro continue to a new high into next week, just keep in mind that that's coming into completing a probable wave 5 and a weekly high. So the upside should be relatively limited. So that would be a pretty good opportunity for short the euro or long the dollar once we go through the next daily momentum cycle and bear reversal, which is likely to be complete by the end of next week. Great trading setup. Euro is such a great market to trade. So this is crude weekly data. It's the August contract. We've been looking for a probable weekly reversal this past week, the week ending June 30th. If we go back to the June 2022 high, every 11 weeks we've had a reversal. Now the last 4 have been highs, very distinct highs, corrective highs, followed by continuation of bear trends to new lows. So this past several weeks have just been sideways. So we've been looking at the week ending June 30th as a possible weekly high or low. Well, I think it's worked out to be a low because we've gone sideways, and then we had this bull reversal week this past week in price, and both the 8 and the 13 weekly momentums made bull reversals as well. So probably a weekly low is just complete last week. Probably we're just in the initial stages of a trend that'll be sideways to up for several weeks. Now, I'm not necessarily implying that it's going to be a real impulsive trend to new highs or anything, but just that the side of the market you want to be on is going to be on the long side for at least the next 2 or 3 weeks, not necessarily 11 weeks, but the next 2 or 3 weeks anyway. So I think that the crude is in an immediate position for a long trade. The better position, I think a better setup, will be following the next daily momentum cycle. So that's what I've told our subscribers, is that when the next daily momentum cycle has been made and bull reversal, then the daily and the weekly momentums as 2 time frames will be in sync to continue a weekly bull trend. So when that occurs, probably near the end of next week, that's when I'll alert subscribers to that. But what you need to know, just in general, is that as of right now, the crude is probably in the initial stages of a bull trend that'll last at least a few weeks. And the beauty of it is the stop out point is just below last week's low. I mean, if crude were to trade below last week's low, then it voids that whole timing position particularly, and something else is going on. So when you're within 1 or 2 days of probably beginning a new weekly trend, that's the time to develop a specific trade strategy and take some action. Well, that's it for today, my friends. Thanks for tuning in. Thanks for checking us out. If you want more information, go to dynamictraders.com, and you'll learn all about our products and services, which will help you to become a better trader. This is Robert Miner, over and out for now. Hope to see you in 2 or 3 weeks when I'm back with another video. Take care.